what countries currently are sort of the flavor of the month for international capital at the moment? I mean, take a choice.
So what we're seeing is obviously, from a core perspective, I mean, obviously everyone is looking into China. However, we do realize that for core investors is not a very easy way to find your way into in order not to violate your investment criteria. But what we're actively looking at the moment at is Tokyo. Actually, at the moment, offers good time to enter the market if you find the right quality product, which is not easy to find. Also, what we're seeing is Singapore actually is very interesting at the current rental levels at the moment, because we see there's a bottoming out in the market. And actually, if you look into the future, short-term leases, so there is for sure potential for increased rental rates in the future. So we see a lot of demand actually for Singapore market. But again, a lack of product that is available for institutional investors. So, of course, the pricing does not seem very cheap at the moment. Again, you need to look into a future perspective, and so we see that there's a strong interest.
We look at Asia, we divide it into two camps, developing Asia and also developed Asia. Developing Asia, we're talking about urbanization, strong growth, therefore you got the income growth, you got the emerging middle class. And we believe those opportunities will be there for a number of years because these markets are growing. But on the other hand, you got Japan, Australia. Then we're looking for dislocation. Japan in particular at the moment, we estimate there's like 60 billion of loan-related opportunities. You got maturing CMBS, you got loans to bankrupt developers, to private equity funds that you're buying 30 cents on a dollar. And at the same time, the fundamental of these markets are pretty strong. Single-digit vacancy rate, you can buy buildings 70% plus leased. So I think favor of the month or for the next 6 months, I think Tokyo.
So talk to me a little bit about China.
I think there's some clearly near-term irrational pricing, but longer term, if you look at the fundamentals more generally of the market, I think they're very compelling. And we're particularly focused on second and third tier cities, mid-market residential development, some retail, suburban retail, particularly in those cities also. And I think that's a sector of the market, sector of the economy where you really are not going to have to fight fundamentals. You're going to have cycles in pricing, but the fundamentals I think are going to support the investment thesis. But I think the rationale for investing in China is very different to Ulrich's point than it is for Japan. Yeah. And so it's different types of capital, different risk return.
China is the driving force for the whole region. Nobody can deny that. But as also Richard said, for us in Kuwait Finance House as a strategy, we try to avoid tier 1 cities in China. We go after tier 2 cities, which you have a better margin for profit, and also the prices are not that much inflated. It's a matter of balancing the risk between different regions. My belief, I mean, I worked in the region for quite some time. I believe China's market is unique a little bit. It's different because they are, my opinion, they are experienced several economic cycles at one time. And that's, nobody have seen it before. And this is why a lot of people do not understand what's really going on. But the fact is, as I said, my experience is there are different economic cycles in one country, which is China.
You all have been talking about China in terms of primarily residential.
Yes.
And when we talked about Tokyo, you were talking primarily about core office. Is that a correct assumption?
Well, actually, Tokyo, we actually look for residential, basically multi-family rental residential en bloc as an investment, and also logistic. Office, I think, is a story of 2011 or 2012 because I think prices are still coming down, and there will be a lot of stock coming onto the market because of all these maturing CMBS.
Okay. No one has mentioned India.
India, my interpretation, India is a different market. You cannot put it in this region.
You can't put it in this region?
No, it's a unique, different market. It has its own environment.
Do you have investments in India?
We tried. It's very difficult. I mean, honestly.
Why?
Legislations, the system, the legal system in India, honestly needs a lot of work. Jurisdictional cycle in India I mean, it could take you years and years to settle a dispute. So these are, for a foreign investors, these are one of the challenges. And still the laws are not really that transparent when it comes for foreigners.
What sort of structures do foreign investors prefer? Are you doing developments? Are you doing joint ventures? Are you buying outright 100% acquisitions? How do you structure a deal with an Asian owner or developer?
I mean, again, the simplistic answer is yes. I mean, we do all of those. For development, particularly joint ventures, I mean, I think it's very difficult, as in any of these markets, to develop as 100% foreign developer. We're not a developer. We don't have that infrastructure to develop. We're an investment manager. We have in the past developed projects ourselves, but our preferred strategy is very much to partner with local developers. And if you think particularly about our China strategy, we work with 5 or 6 different partners, most of whom we've done multiple transactions over the last 14, 15 years since we've been in China. So from that point of view, very high level of comfort on both sides, understanding of what we like to see in a project, how we like to run it, our understanding of how they operate, good understanding of who we feel their good teams are, because these are now becoming very large organizations, and trying to make sure that we get the right people on the right projects in the right cities, and have a very good long-term recurring relationship with those partners, rather than just one deal in and out.
Now, ideally, of course, if you enter the market as a new participant in a way, so it's very wise to team up with people who have a network on the ground, who have local market experience, and who can give you some good advice on players in the market. Because obviously, some track record is something for sure from larger developers that you can see if you take it to real big or higher level. So I think for the Chinese government publishes a list like with the top 15 developers every year. If you want to take it to that level, that will be something a little bit more official, where you can say, well, at least if they've gotten that big, if they got this official publishing, you could expect that they, to some extent at least, have a good reputation in the market. But this gave them the opportunity to grow. Other than that, of course, again, it's of course lack of transparency, and so you better find people that can help you really getting into it.
And it's quite old-fashioned due diligence, right? There's a lot of, we have 26, 7 people in Shanghai that spend a lot of time kicking the tires, diligencing other projects, talking to, people who've bought apartments from those developers previously, people who've worked with them before, contractors, banks.
If it's a private company, privately family-owned company, how do you get comfortable with their financial solvency?
Well, I have to say those will be much more difficult than the listed or the big ones.
Yeah.
Or sometimes you can tell right away if who are their auditors. Are they the big 4, or are they using a local firm? If they're using a local firm, then a lot of these things could be more questionable than the others. Obviously, track record is the key. The company's reputation in the market. How do they manage the existing properties? I think all that will give you a good indication of how good they are.
But I'm not sure whether anywhere in the world there's anything like 100% certainty before you start working with somebody. Because even if you've done the best diligence, the working relationship might not work out. There might be extraneous events that impact their business, that lead the partnership into difficulties. I mean, certainly people who've been partnered with financial institutions in the last few years would have, going in, felt very comfortable about the financial position of their partner, and then all of a sudden, the subprime crisis hits and investment banks go under, and they're no longer able to meet their commitments. So I think it does go both ways. Certainly we find, given what's happened in the last few years in the sort of international private equity real estate investment space, that a lot of local partners are very wary about us.
If all the local developer wants is my money, then it's not a good relationship. Can you all explain what that means?
Well, I think in a way, if you look at it, so we manage obviously assets in 26 countries. So of course, for some developers over time, if they accumulate more capital, so they might be interested in diversifying their investments outside. So, and I don't know if you look at it long term in a relationship in a way. So that also for them can be very interesting to get market access, market contact from investors basically. So I think if there is this shared understanding that so both sides basically can learn something from each other, being it about markets, being it about sometimes even about developments, those type of things. So I think that is something probably that provides both sides with more satisfaction over time, because if you just feel like, well, we're giving our money, they just want to have our money, they don't want to see us even, so that's kind of bad flavor in a way, right? So and I think basically also the developers can learn a lot from their foreign investors, so and basically help them to grow even more in the future.
Clearly, the capital relationship is important, but that needs to be in balance. And if the only reason is that we have capital that they don't have access to, at some point there will be the likelihood for a misalignment of interest.
Ali, you represent Kuwait Finance House. Do you see other Middle Eastern investors here in Asia from the Emirates or Saudi Arabia or some other?
If we talk about the GCC countries, yes, the interest is there. They are in the region, and unfortunately still not organized between each other, but there are individual attempts for investments by the GCC countries, either the government organization or private investors. Honestly, as you already indicated, how do you know you're the right partner? I think a lot of them knew the answer the hard way. It's very challenging.
Don't always know you have the right one, but you know very quickly when you have the wrong one.
It's very challenging to know you are dealing with the right partner or not, because you have to go to basic knowledge, basic relationship, old-fashioned style of doing business, and yet you are at the same time try to do your best. And again, for our case, I'll give you an example of we use Hong Kong as a base for all the bookkeeping, all the necessary precautionary measurements needs to be taken.